Elliot from Abroad. Recently, we were asked a couple questions about crowdlending, and I thought the discussions that came out of those questions was quite cool, and I thought it'd be really nice to share it with you guys. So, in case you had some questions about crowdlending, we might be able to enlighten you a little bit. So, what is crowdlending? Okay, so once upon a time, when you wanted to borrow money, you had to go to your bank, and whatever the bank offered you, if they offered you anything at all, you had to take it. If you didn't like it, tough taco. No money for you. With crowdlending, instead of having to go directly to a bank, you go to a platform, and the platform will try to match people wanting to borrow money with a bunch of individuals wanting to invest it by lending it out, right? So let's say I wanted to borrow 5,000 euros to buy, a jet ski, because they're fun, I guess. I could go to my bank, and the bank might reject me, but then I could go to the crowdlending platform and say, hey, I need this 5,000 euros to pursue some hobby that I'm somehow interested in because I read about it in a magazine. And they'll be like, okay, cool. Well, I'm going to try to match you with as many different individual investors who will spread the risk and the loan between them. Maybe 10 investors put in 500 euros each. I get my money, I buy my jet ski, my wife hates me because I never use it. The investors get my money plus some interest. Done. Okay, so that's pretty much the gist of it, right? Now, what are some of the risks involved with crowdlending? First, and I'm going to talk about this from an investor point of view, so if you're making the loan, there are many. Okay, right off the bat, if someone's getting rejected by their bank or the bank is giving them some ridiculous terms, it's a pretty good indicator that the bank doesn't think they're going to be, able to pay that money back. If they did, the bank would give the loan because banks make their money lending money out. So if the people are going to crowd-lending platforms to get a loan, that means that they've been rejected by a bank, which also means that you, lending the money, take on a lot more risk than the fact that they'll default. Or if they default, which means not paying back the loan. Second, a lot of the platforms, especially the ones here in Europe, make loans into places we call in the financial world emerging and frontier markets. These are places like Kazakhstan, Bosnia, Kenya, Mexico, where the countries are still developing, right? There's not a lot of legal protection, there's not a lot of transparency there, and as such, you can make very high interest loans to these individuals. So there are two issues with that. First, like I was saying, the transparency and legal part of it means that if the loan goes bad, if there's even some sort of protection to get your money back, it's going to take a lot of time to get it back, if at all. Second, there's a big currency risk involved, right? So if you're lending to someone in, say, let's say Kazakhstan, and the Kazakh currency, the tenge, goes down during that term of the loan, either you're going to lose money because the exchange rate went against you, or the person who has to pay it back is going to have to pay a lot more than they initially anticipated, which increases the risk that they're not going to pay it back. So that's a huge red flag in terms of risk. I'm not saying you shouldn't take it, but it's something definitely worth being aware of that you don't really see so much, and I think it's really important to share. And finally, if there's all of these high interest loans that they're purporting to make, there's a good chance that the whole system is kind of over leveraged, meaning there's too many loans being made to the amount of money on the bank's or the lending institution's balance sheet. That's also a risk. We saw the impacts of that during the financial crisis in 2008, 2009, so it could get ugly, but it's a risk that you need to know about. Finally, where would you want to put this in an investment portfolio, and how would you as a person abroad want to do that? Well, first, given the risk, you don't want to put all your money into a crowd lending platform. Depending on how much risk you're comfortable with, would depend on how much you'd want to invest. I wouldn't go over 50% of my money And again, I don't know you. I barely know me. But anything that you're not comfortable losing, don't put it there. And there's a lot of bullshit advice going on saying put your short-term cash in there, because these are loans that are paying 15% interest over 3 years. Anything paying 15% interest over 3 years is risky. It's extremely risky, especially compared to equity stock funds. Like, there is a lot of risk involved there. So just keep that in mind. If you're saving up to buy a house or go on vacation, you're better off doing a less exotic, less sexy investment. As a person living abroad, you just need to make sure that what platform you're using is going to be the most tax efficient investment for you, depending on the country you live or when you move. Interest gets taxed at different rates depending on where you live. That could impact, the overall return you make, and it will also make your tax reporting at the end of the year quite complicated. Anyways, apologies for the longest video. This is actually a 3-part series we wrote. Yeah, we really, learned a lot. So, I hope you enjoyed it. You can speed it up if you want to hear me talk faster. Unfortunately, the pitch doesn't go up. But still, you get the information a lot quicker. Anyways, I have the links to the articles down below. If you have any questions, leave a comment or drop us an email. And thanks for watching. Take it easy.